Okay, this is us inside my Wealthsimple trade account. It is nothing too outrageous at the moment. Hopefully that will change very, very soon, sooner rather than later. We currently sit at $547.11 Canadian. This is in my TFSA, which is a tax-free savings account, which if you're Canadian is where most people tend to that's the route they tend to go down. There's also an RRSP, Registered Retirement Savings Plan, that kind of helps you with some tax deductibles, but you pay taxes on it when you do pull money out. With a TFSA, if you are investing in Canadian companies that trade on the Toronto Stock Exchange and they're not American companies on the Toronto Stock Exchange, you receive the full benefit, dividend, and any capital gains entirely tax-free if you stay under your yearly contribution limit, and we will go over that in another video, but there is a contribution limit to that, so you can't just go and put $1 million in this account and expect to get all that capital gains and returns tax-free. That's unfortunately just not how it works. Here's a snapshot of the last month, which is roughly how long I've just opened this account for. So as you can see here, it's just obviously been on a pretty steady incline. We went from $0 down here up to 95, which is my first deposit. Another couple days later, a couple weeks, we're up to $223 in total value. And then right here, it was a huge jump. What I've decided to do is every other week, as soon as I get paid, I put $315 directly into this account. And that happens automatically, so I don't even have to look at it, do anything manually. It just automatically goes right from my bank directly into this TFSA account. This is where the biggest jump took place. At this time, we only had a deposit of $225 in total. And then I deposited $315, bringing my total contribution to $540 on September 25th. So I've totally invested $540, and our current value is $547.11. So a total profit of 1.32% or $7.11. I currently only hold 3 different shares in this portfolio. One being CNQ, that was my first purchase, which is Canadian National Resources. Second being Enbridge, which is a Canadian gas company. And the third being what I put the $315 into just this past week, which is VDY. It is an ETF. And for those who aren't familiar with what an ETF is, basically an ETF is a basket of different companies that you can purchase. So for example, if you're in Canada and you have the Bank of Montreal, TD Bank, CIBC, things like that, and you don't know which individual stock you want to purchase, you can buy an ETF that holds all of those different companies, and then it diversifies your investment across those 3. So if one tanks, it's not a total loss or wipeout of your account. It just helps to diversify your account. Here's a better look at the ETF I just recently purchased. Again, it's called VDY. It currently trades at $57.79. In the last year alone, it's had a growth rate of 19.87%. In the last 5 years, it's had a growth rate of 93.93%. It has a dividend yield of 3.54%. So if I were to invest $100 and just walk away from that over the course of the year, I would receive roughly $3.54 back in dividends. It's consecutively paid its dividends for about 12 years, which is great. When you see ones that are on that kind of lower end of the spectrum, like 3-4 years, it's a little bit more riskier. But as you can see, VDY has continuously paid back its investors over the last 12 years. And lastly, I get paid every month from this dividend, so I actually haven't collected anything from it quite yet. But I did end up purchasing this ETF before the ex-dividend date, so I will receive a payout on the 8th of October for roughly 14 cents. My plan with VDY overall is to probably invest about $3,000 to $4,000 in it before I take my attention off VDY and invest it into something else. I know some people might have mixed emotions on that. They don't like to see you go put all your eggs in one basket. That's just more so what I feel comfortable with at this time with what I know of VDY. Then I can expand into things like Vanguard, VFV, Enbridge, TD Bank, Bank of Montreal, things like that. But I think I want to throw a good portion of my first initial investment at VDY. Now, if we're looking at VDY on TradingView, you can see if you scroll back, this is the weekly time frame. We're currently at an all-time high, which in short is kind of a bad time to invest. But when you cost dollar average, into a stock, I don't really think it's going to make that big of a difference. I will end up buying it at $59 and probably at some point end up buying at $52. And the idea is that in between all those different investments at those different price points, it kind of averages out. Obviously, if I had a choice, I would go way back down here into April of 2025 and buy it when it was at $44. That's just not how the markets work. So you buy at the next possible time to buy. The next best time to buy is now. Okay, well that's it for today's video. If you did enjoy it, please leave a like, comment, and subscribe. You can let me know which stocks you're buying or what ETFs. I'd love to have a look at those as well. And please come back in the following weeks so you can watch me invest more and watch this account grow with me. And until next time, we'll see you guys in the next video. Have an awesome day.